Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator for technology startups. We have a distinctly different philosophy about startup acceleration. While the vast majority of accelerators out there are teaching the blitzscaling from the get-go philosophy, go big or go home, we have a completely different way of looking at entrepreneurship with a bootstrap first, raise money later, or not at all philosophy. So it's a very different program, very different curriculum, very different methodology from what you learn at Y Combinator, Techstars, or other similar accelerators. Our mission is to help 1 million entrepreneurs reach $1 million in annual revenue and beyond. We, by definition, by design, we support these bootstrap startups. 1 million entrepreneurs are not going to raise venture funding, and they shouldn't. But they are as important to us and to the economy, world economy, as the ones who are going to build billion-dollar unicorns, and we support both of those. This is our 704th free mentoring roundtable. We've been doing this since 2008. It started with an experiment with online mentoring that then blossomed into the full 1M1M program, which has now been around since 2010. And these roundtables have seen more than 300,000 people participate over the years. And we are here most Thursdays. Here and there, we take some breaks, travel, holiday, whatever, but not that much. So, easily we do 45 to 50 roundtables a year. And then, of course, we have the premium program, which also has the same format of online roundtables as its coaching framework. We're going to start today's session with a conversation with Sandeep Sardana. I just want you to be aware of something we have introduced recently, and that is My Digital Mind AI Mentor. You can upload your slide deck to this AI mentor, just like you're uploading your slide deck here and I'm talking to you. 20 years of my mentoring sessions, writings, case studies, everything has been used to train up My Digital Mind AI Mentor. And it's now available for you to upload your slide deck and start conversing on your own schedule as much as you want. Here, there's constraints. That one you can have a lot of conversations. Maureen will give you the link in the public chat, and we can talk about this more if you have questions. But for the moment, I am going to switch to my conversation with Sandeep Sardana, founder and general partner at BluePointe Ventures. Sandeep has been here before. We know him. He knows the program. Sandeep, welcome back, and I'm looking forward to catching up with you, Menlo Park neighbor.
Thank you, Ramana. Thank you so much for having me again. And thanks to 1M1M team. I'm really impressed by what you guys are doing. Great service to the entrepreneurship world, particularly reaching overseas the way you do. It's a global program from what I understand. And I think the conversations you're having with the entrepreneurs as you're coaching them, as you're mentoring them, only fosters the entrepreneurship I think sphere as we need it, because as investors, right, we need more companies, not less, and more educated they are when they come through a program like yours, the better it is for us.
Yeah, absolutely, absolutely. And there is this myth in the industry that entrepreneurship equals financing. So there is entrepreneurs, when they think they're going to start a company, they immediately start thinking about, okay, now I need to raise money, which couldn't be farther from the truth, right? They need to do validation work. They need to get to some viability before they should approach investors. But this misconception is pervasive, it's ubiquitous, and it's far-reaching. So we are continuously dealing with this myth and helping people, coaching people to unlearn this fallacy in the industry. And it is, unfortunately, in 20 years of doing this, I have not been able to get this to sink in fully. So we have to do it one by one. And I'm very happy with this AI mentor right now, because I can get this AI mentor to do some of this work without my having to do all of that heavy lifting in person. So Sandeep, what is going on with your fund? How are you parsing the world around us, the immense pace of change that we are experiencing in the industry right now, the technologies that are coming about, that is upending venture as an industry, upending the expectations of what needs to be there in companies, because ultralight startups are taking off like crazy. So there's like all kinds of things going on. I'd like to parse that with you. I'd like to hear how you're parsing, all this, and how you are, forging forward with your own investment thesis.
I think that's a great question, Samana. I think there's obviously major disruptions in the entire market. Our thesis has always been building on industry operating systems, industry OS. We started with vertical SaaS as our core component. We invested in a lot of vertical SaaS companies when that was sort of the right move, if you will, because it was core to what we knew, how we could help startups. I think the world is changing, but the problems of the world are maybe same or even more compounded because of these disruptions, right? It's not just a disruption to our industry, it's a disruption to every industry.
Yes, that's right.
And because it's a disruption to every industry, I think somebody needs to get out there and get in front of it. And in our world, our job is to get out in front of it as well. And while there are lots and lots of ultralight startups, there's also lots and lots of startups that are in between and on the other side of the ultralight startups, which are very heavy, for example, right? You can take the ones that are hyperscaler funded types, right? So it's, we see this barbell effect happening again, right? Lots on one end, lots on the other end, and the middle thinning out. So finding this order in chaos is our job, and same thing was happening in when vertical AI was about taking off, and we made sense of it, helped out founders with our networks. You always need a design partner. You may not necessarily need capital all the time, but you need design partners. You need customers. You need to make sense of a GTM motion that gives you defensibility and acceleration and scale. So we keep our focus on that and continue to look for people who have deep domain expertise and can solve problems.
So Sandeep, is vertical AI your primary investment thesis?
It is. It's vertical AI. It's a nice sort of transition from vertical SaaS. I think the business models are fundamentally up for grabs again. In SaaS, you had a recurring revenue model. In vertical AI, there are lots and lots of it is changing to outcome-based. There are a lot of services being layered in between, which doesn't necessarily mean it's going to be recurring, but can be. So business model changes are also happening simultaneously. The time to value is where we see a big change. The ROI that a customer expects and how quickly they want to see the ROI is changing as far as we can tell. Customers their expectations are things will prove to be beneficial sooner, much sooner. It won't be months, could be days, could be hours. You can literally deploy it and start using things that are working immediately for you and making sense of your processes, your workflows, your data.
Interesting. So there's a whole range of things that you've said in there, and let me kind of extract each of them and
Sure.
explore those points so that we have a clearer idea about where your head is vis-a-vis vertical AI. So my first question is, you come from vertical SaaS, so you have a portfolio of companies that are vertical SaaS. Is vertical AI being retrofitted into those vertical SaaS companies? And if so, how successfully is that happening in your portfolio? And are the ones who are starting as AI native companies at an advantage in vertical AI?
Yes and no. And I think I am seeing both. Time will tell which one's a winning strategy to some extent, but I'll tell you something. Distribution is a major advantage for people who already have it. And if they can solve the AI case while they have the vertical SaaS business in hand, because they have the customer's trust, they already went past all of the the buying issues in terms of procurement and being a preferred vendor and this, that, and the other. They've already sort of crossed that chasm. They've already sort of gone through the security ops, this, that, and the other, right? All of those pieces already passed. Now it's a question of leveraging AI. If the teams are smart enough, they can do it. Some places you can integrate with bots. Some places you can take a workflow and redefine it. Some places you can add computer vision. It's case by case, but remember, we are investing in vertical SaaS in companies that are building industry OSs. So they've already taken, I'll give you an example. We have a company called Techion. Techion took AI retail, automotive retail, and took 14 different packages a dealership would run on and integrated that into a single package, right? They already own the entire value chain within a dealership, and the connections to manufacturers, dealers, customers, all in a single system. Now, for them to add AI is not as difficult if the teams already know what they're doing, and they know where AI can help in the finance process, in the customer service process, in the recognition that the car is already in the service bay, things like that. I think there's a set of companies that can leverage AI, and there are a set of companies that may not be able to leverage it as quickly, and there will be new startups, new incumbents who disrupt them. There are cases that didn't used to exist before. For example, vibe coding, right? Came out of the blue.
Yeah.
And it didn't used to exist before. All of a sudden, you recognize that AI can actually write code and do a really good job.
Vibe coding, I think, is a different issue. We can talk about vibe coding in a moment, but let me first kind of comment on what you said. In vertical SaaS that is already very well deployed, like the example that you are working with Techion, the automotive dealership operating system, let's call it, vertical AI, vertical SaaS. Going from vertical SaaS to vertical AI in this case, there is an agentic path to do that, right? There's a lot of workflow, and in this situation, agentic AI is a viable path architecturally to get all this stuff into automation and agentic functionality, and that is actually best done by people who have domain knowledge and who are already deeply entrenched into the workflow of that industry.
That's correct.
Yeah, please go ahead.
See, they have access to the proprietary data, right? They understand the language, they have the proprietary data. And remember, a lot of these industries that were digitized back when to vertical SaaS were sleepy industries.
Yes.
They were, they had some cloud, mostly on-prem. We were lifting them out of on-prem into the cloud. Once you bring them into the cloud, once you bring them into the modern infrastructure, It's a lot easier then to add agentic pieces to the workflow and to the processes. You're already a domain expert.
Yes.
You already have the distribution. You already have the customer trust. Now you got to take it to the next step.
I think the ones that are having difficulty in retrofitting are the ones that have architectural limitations of what needs to be done.
100%. You're absolutely right.
Now, what about human in the loop? In this use case that you're talking about, what are you learning in terms of adoption and AI adoption, human in the loop? These are pushbacks that the industry is facing from enterprises and businesses.
I think for the foreseeable future, human in the loop is an important piece in a number of things that we're seeing. I think agentic right now is not a replacement, not an entire replacement. Hallucinations are still part of it. You need training. You need human in the loop for cases that agents cannot handle. But things are moving faster, if you will, right? So if you go agentic, things will move faster, they will happen faster. I'll give you an example. We have a company called AI SDR. The SDR function is handled by AI. It can book meetings for you. AI can completely personalize the outreach and book meetings for you. In most of the cases. In cases where it cannot, human is in the loop. And there are examples of companies that are successful in adding human in the loop. But over time, as data enriches, eventually, I think a lot of that human in the loop will be reduced.
Yeah. Now, what are you learning about pricing, business model, pricing model? We're talking about outcome-based pricing. We're talking about subscription still is the preferred business model of the industry. I've talked to a number of companies that are still doing subscription, AI companies that are still doing subscription because that's what the buyers know how to buy. That's what the buyers are comfortable buying. And they're staying with subscription as their business model. What are you learning in your portfolio?
Well, the way I think about this is the reason software became everything to the world is because software has amazing margins. The marginal cost structure for software deployment is almost nothing, right? And subscription just made it a lot more palatable because you had a sense of recurring revenue. And you can break down the pricing, and you can come in for a lot lower, but still maintain your margins, and find scale if you hit the right problem on its head. The same principles I think will apply to any pricing structure that comes forward, whether it's outcome-based or subscription. Over time, I think if outcome-based produces the same level of margins at the level of scale that we're expecting, I think startups will be comfortable with it. I think customers will be comfortable with it because startups will be more willing to offer it. But today, I think subscription is still the preferred path because people are used to it. They just want their problem solved. Subscription has never been a problem as such. New startups can come up and say, look, we're going to offer you outcome-based. While you're using subscription-based today, you're locked into a year, 2-year, 3-year contract. We can give you an outcome-based pricing. Fine, as long as you give me results that I'm looking for. Yeah, outcome-based may be fine, but over time, it'll converge towards the same level of pricing because all of us have to see the same level of margins.
Well, I think there is another reason why subscription became the standard of our industry is because investors, the financial community, loved the predictability of it. You can forecast subscription-based pricing models a lot better than outcome-based pricing or licensed software or anything, because there is that repeatability, there is the recurring factor to it. And that's what Wall Street loved when cloud companies started first getting public. They just fell in love with the business model because it's predictable. It is something that people can build financial models around. And that still holds.
That's a fair point. It is. It does add predictability, and that does make a lot of sense for not just Wall Street, right? I mean, all the CFOs like it.
For everybody, for you guys, for the VCs, everybody.
Yeah, absolutely.
Yeah. Okay. You wanted to talk about vibe coding. So let me just kick this off by, and I'm sure a lot of people who are listening are watching what's happening in the vibe coding world, and the big visible story is Lovable. Lovable went from 0 to $100 million in recurring, quote unquote, recurring revenue in 6 months or 9 months. That's very unusual level and speed of growth that the industry has seen very rarely before. And now we're seeing some of these cases, and most of them are actually coming from the vibe coding use case. But then Lovable went and raised $200 million at a exorbitant valuation and so forth. I said when that happened is that this is a mistake. And it is turning out to be a mistake because their quote unquote recurring revenue is not recurring so well right now. And they are going to have a very hard time growing at that pace with that valuation and with burn rate going up and so on. So tell me, what are your musings? I just gave you some of my musings. What are your musings about vibe coding?
I think it's a wonderful use case, right? I mean, I think, like I said, it came out of nowhere, and it is probably the prime use case in the industry right now. And there, it's not just vibe coding; it's a toolkit around it as well. You can code, but how do you review the code? So we do have a company called CodeRabbit that does code reviews, and it's growing at a breakneck speed. Today, it makes sense because these tools are just coming together. The world is getting used to them. They're adopting them because obviously there's value, right? They're seeing value.
There's no question there's value, especially in our world. Non-technical founders were always at a disadvantage. Now they can prototype and get to MVP that quickly just because of vibe coding, but the product still needs to be built. Vibe coding products necessarily do not scale and do not really, sustain.
I think there's going to be a world that they have use in, and then there's a world that they don't necessarily scale to that level.
Yeah.
I think there'll be other tools for those pieces. They will come together. But for now, I think it is an amazing use case.
It's an amazing use case. It's an amazing use case, amazingly useful tool.
Right. So, I think scale issues aside, I do think that they've carved themselves a space, and then there are tools that are coming together around them. They're also carving themselves a space, and the distribution advantage these guys have, and how fast they're growing, how fast they're sort of distributing. It is phenomenal to see, right? It is a global use case. It's one of the first global use cases.
My favorite case study of a vibe coding company actually is Base 44. In 6 months,
Base 44.
In 6 months, with no financing, that company got acquired by Wix for $80 million. And Wix is a perfect acquisition for them. Wix is in the same space. They have the customers, and they can scale that thing very rapidly. So it's an excellent path for them to scale. But it's a great entrepreneurship use case, and this is an ultralight startup clearly. So vibe coding has brought us a whole genre of companies that are doing amazing things in ultralight product-led growth mode, scaling in a pace that we have not seen before. So absolutely. So here's my more complex question. In many corridors of Silicon Valley and in many dinner parties that I've hosted or been at, there are conversations going on right now about AGI. And when does AGI hit the market? The timeline that people in the know are working with, is between 3 and 10 years. what happens to everything that we are working with if AGI hits? There is analysis like this is the end of capitalism. All work ends once AGI does everything better than people. Pretty much all work comes to an end. What happens to venture capital? What happens to vertical SaaS? What happens to anything, basically? So what is the thesis that you are working with?
I think it requires a definition again. There are a lot of confusing terms. There's AGI, there's superintelligence, right? There's all kinds of stuff happening. To some extent, my assumption it's already here in some form. Somebody already has it working. Is it as widespread as what it should be? No, not yet. I think that could come. But remember, our point of view is that applied intelligence is probably as important, if not more important. The data modes, the workflows, the governance models still have humans behind it who've defined it, who continue to innovate on. And they will still require humans to understand things and play them out. Do I think AGI will take over everything? No, I don't think it can. I don't think that's I think there's I think some regulatory concerns as well. I mean, I've been part of those conversations where we've talked about what will happen to all the jobs. Well, people have to go on basic income. We have talked about it, but I have not yet seen that happening. I do see jobs getting obviated. There are some junior level programmer jobs. There are junior level underwriter jobs. Those I've seen gone away. They're transitioning to something else. And as technology and innovation comes every so often, big changes come every so often, workforce gets retrained, and you get this additional step of improvement in the economy, in the overall scheme of things that AGI will probably bring. But I don't believe that all these businesses start to sort of vanish and technology runs technology only, if that's what you're saying, right? I remember a while ago when robo-advisors came out. And robo-advisors were the ones who were doing wealth management, right? Or things like that. And you could literally take any portfolio and have a robo-advisor sort of, review your data set and come back with what your portfolio needs to look like, and they could manage it. If you look at the investment advisor business, there's still as many humans, and it's grown crazy. And RIAs are actually leveraging those robo-advisors, not being obviated by it just yet. The market, the pie is expanded. But I haven't seen technology take over because human relationships still matter. Tell me about this, right? Think about how you buy or sell a house. There are people who use the technology tools to buy and sell homes, but there's still as many real estate agents out there as there were before. They're all leveraging technology. So to some extent, same thing will happen with AGI. The tools will get better. I think humans will leverage them. And those who are smart or smarter will do better with those tools.
So let me give you what I'm thinking, and it's a little bit slightly different from what you're thinking. Where I agree with you completely is that it's not here yet. I actually do not think you're saying that AGI is here yet. AGI is not here yet.
I'm just assuming that it's here. I don't know if it is or it isn't.
I don't think it's here yet. But the point at the moment, the state of the union is human in the loop. And probably for a little bit longer, it is going to be human in the loop. But every workflow that is being created, AI workflow in every vertical, every domain that has a human in the loop, has the potential of that human being removed from the loop as as more domain knowledge, as more fluidity develops there. And I actually believe that that is going to happen at scale. The Economist has a very good analysis this last issue, I think, that junior jobs are not being hired. It's not so much they're getting fired, but they're not being hired. So entry level hiring is stalling. In the companies that are adopting AI, entry level hiring is stalling big time. And that means that, if people cannot enter industries and cannot get trained, where are the senior people going to come from is a big question mark, because somehow somebody has to train them so that they can become senior employees, right? So that raises a question mark there, but it is, it's just a matter of time that the firing will start. Right now it's non-hiring, but the firing will start. So I think, when we say there will be no jobs, it's not like there won't be any jobs, but the tremendous dramatic reduction in labor as part of the economy is going to be incredibly disruptive and incredibly unsustainable without universal basic income. So I do believe universal basic income has to come. Otherwise, there's going to be social unrest. It will have to come. And on the point of the data moat, there is, if you understand the structure of data, there's a lot of synthetic data being created right now to train AI models. So that moat is a question mark, and will continue to be, or will increase as a question mark as we go along. Then comes the question of, can AI manage AI? Can technology manage technology? We're not there yet. That part we're not there yet. Agentic technology is there. Agentic has not been woven into enterprise quite as much yet, but you just gave us an example of an industry, of a domain, this automotive dealership, where it is, agentic AI is being adopted, and it's being adopted successfully because the domain is understood by the people who are bringing agentic technology in. And yes, there's human in the loop, but those humans will start to get out of the loop as this, as enterprises become comfortable with adopting AI. So, is it a year, 2 years, 3 years, 5 years, 10 years? We don't know yet. That's the question mark. I think the timeline is the question mark. The trajectory is not a question mark. I think we are going to go to robotics. I mean, think about it. China is building factory after factory right now, has not a single human being, and it's all dark. Doesn't use a lot of energy in keeping the place, warm or heated for the humans. It does for the machines. The machines still need to be maintained at a certain level, but it's hugely conserves energy, and it operates in the dark, but it works like a clockwork, and that is the future of manufacturing, right? So that is enormous number of jobs. Self-driving cars, self-driving trucks, enormous numbers of jobs. So all of this is coming. It is going to come. At the moment, I kind of believe that small language models are great, because small language models don't have to hallucinate as much. And for point problems, domain-specific problems, they are perfect to solve the problems, extract enormous amount of value, and that's great. But AGI doesn't need small language models. AGI basically can operate with super intelligence, and that will make, I think, a lot of the solutions that we're coming up with now, at some point will become obsolete, because there's going to be more powerful technology entering the system. And at that point, there is another layer of disruption, and we don't know whether that is 3 years hence, 10 years hence, 20 years hence. We don't really know that. That would be my synthesis of. So end of capitalism is going to come. When it is going to come, we don't know yet. That's kind of my synthesis.
Yeah, look, I don't disagree with a majority of your thesis. I think you're right. I do think it's headed in that direction. The question is timing.
Timing.
And in the meantime, right, the world still needs to operate. Things need to become more efficient, and there's productivity gains still need to happen. So we are investing in the companies that are solving problems that we're seeing today for the foreseeable future. Where the companies go from there, how they evolve, time will tell. But the domain expertise we look for right now to build out industry operating systems, that problem still sustains.
At the moment, domain expertise is still very valuable and is a defensible moat, I think. Yes.
So we are still focused on that. We're still seeing value in it. We're still seeing lots and lots of demand for that kind of stuff, and we continue to plug away. I mean, look, if AGI takes over the world, maybe my agent will be talking to your agent, your MCP server will be talking to my MCP server, and we won't have this podcast to do. I don't know, right? Maybe there'll be agents building their own podcasts.
There is.
Right? But who will be there serving, right? They'll probably be serving other agents. We don't necessarily know. And I imagine a world that agents are there to support what we want to do and make us more productive and make us more useful and happier. That's a world I'd like to see. But
yeah, let us hope for that world, because what worries me is about what has happened in social media, right? The AI, the algorithms have taken over and creating real damage.
They are. I agree with you.
Right. So and that, if that continues, that trend continues and becomes more pervasive. I just read this on Facebook this morning that apparently there are these podcasts or streaming programs in Brazil that are calling people for prayers early in the morning, and I'm like, that's good. This is much better than the hate being spread and by social media and the algorithms creating basically spreading hate and activating people into bad action.
Yeah.
I would rather people pray in the morning. Early in the morning, they pray, they calm down, they feel better about the world, they feel, not aggressive. That's a good thing.
That's a good thing. That's a good thing.
On that note, Sandeep, pleasure talking to you. We'll be in touch and we'll bring you back, as there's so much going on. There's so much going on continuously.
Thank you, Pranav, for staying on top of it and keeping us all aware of what's going on in the world.
See you soon. Bye.
Bye-bye.
Folks, we're going to move to the entrepreneur pitch session. We have 3 scheduled pitches, and I just want to set some expectations. To everyone who's presenting today or on a later date, we are on your side. This is a safe working session. And by the way, the AI mentor is also a safe working session, or a series of safe working sessions. You can go have as many sessions as you want over there in the AI mentor, and it's safe, it's private. This one is public, but this AI mentor is private. And we are on your side. Our only agenda, whether it is in person or through the AI mentor, is to help you move forward and help you strategize on how to navigate your entrepreneurial journey. If you disagree with my feedback here or in the AI mentor, that is your prerogative. It's your venture. You do what you want. We are human beings. We have points of view. So there is going to be potential disagreement, but that's okay. You want to take input. You want to process input. You want to test your thesis against input and then decide how to move forward. We're going to start with Shubham Mishra from India. Shubham, please unmute your line and tell us what you're working on.
Yeah, am I audible?
Yes, you're audible.
Yeah, I'll just open my camera as well. You can see me, right?
Where are you joining from?
Morning. I'm joining from Haridwar. You know Haridwar, it's in Uttarakhand.
Of course.
Yeah,
A
yeah,
place
yeah.
of
Okay.
prayer for sure.
Yes, Devbhoomi Uttarakhand.
Yeah.
Okay, so we'll just start. First of all, thank you so much for letting us in. And the whole world is doing AI, but this is not an AI startup. I'll just load the down, load the
Uh-huh.
hype down. So basically, this is a startup. This is a company made by men for men just to make their everyday life very easy. So this is Beards and Shears, which is an hemp-based men's grooming brand. What we make is we make products just to make a personal life of a man very easy if they are facing any hair fall concern or early aging.
Okay.
Yeah, we can just go to the next slide. So this is a very sweet core team. We have you can just go to the core team. I'll just introduce myself. Yeah. So my name is Shubham. As a professional, I was an ex-senior software engineer working in the cybersecurity domain. I served more than 3 years in the BPC, which is a beauty and personal care domain, where I built a brand from 0 to 100 plus distributors in the offline channel, and I led the business from 0 to 1 crore per year. And then my co-founder Zubin Sharma, he's a performance marketing guy. He have more than 2 plus years of experience in the marketing domain. So basically, it's a very good team where I have the experience of product and the customers, and Zubin have a very good experience when it comes to the marketing end.
Okay.
Yeah.
And where
Okay.
does the
So
experience of this hemp product come from? You're a cybersecurity guy. Where does the experience of the
yeah.
hemp product come from?
So basically, when I was serving plants care, so my family has over 35 years of experience in the BPC domain. Me and my father started our first venture in 2020, and where me and my father worked closely in the BPC domain. And when I entered this domain, I found a huge gap in the men's grooming industry. Then I came to
BPC,
know about,
you're talking about beauty and personal
yeah,
care.
beauty and personal care. Yes,
Okay.
yes. So I saw a huge gap in the men's grooming sector. So this is how I came into this. And when I got to know about hemp, so we made this. So basically, I'll just come to that thing in the later part of the slides.
So your
So
domain knowledge
first,
comes from your family business.
yeah. So this domain knowledge comes to my family from my family business. Yeah.
Okay.
Okay, so discussing about the problems, the problem is pretty big in the world. This is a data from the Dove India, which states that more than 80% of men are still using the woman product. But as we know pretty well, the men and women's scalp and skin are very different. So basically, what we can figure it out that the in the men's grooming space, there's a very lack of impact. And second, there's a rising concern. Gen Zs are very much concerned about how they look. They are concerned about their dark circles appearance, and there is a data which states that more than 50% of men faces hair fall issue when they turn 25. So this is a data survey done by the Traya India on 50,000 men, Indian men, which states this data. And millennials and first batch Gen Zs, like my age is 25 and I can just find my beard getting gray. So we are fighting premature aging and early aging. So basically, these are two major problems, which is one, the lack of impact in the grooming industry, and second, the rising concern. Yeah. Any question?
No, keep going. I'm listening.
Yeah, so you can just go to the next slide. Yeah, sure. So basically, this is a solution that we created. First, we tried to create the impact. So what we introduced is hemp. So basically, hemp is a part of the cannabis family. It looks similar to marijuana. It became legal in India in 2017 because it don't have such psychoactive effects. So we introduced hemp, which unlocked the curiosity for the men, and it has also very good benefits when it comes to skin and hair. And like 10 years back, there was a company in India called Park Avenue. They launched their beer shampoo. It was boomed in India because men related themselves with beer. So we want to create something which a man can flex. Actually, there's a very huge difference when it comes to men and women. Women easily flex what they are using, what liner they are using, what mascara they used, what things, their products, face wash they uses. But men don't actually share these things to others. But when they are using a beer shampoo or when they are using something which is made closer to marijuana, then they are very much actually curious to just share it with other men. So basically, there's a lot of word of mouth publicity. And second, we are solving the concern. We launch products that is very specific to the growing demand. Like we launch products in the hair care segment. We launch products in the segment which treats early aging and the graying of the hair. And we have our own in-house formulation that works and instantly. So yeah. So this is Beards Shears basically, and we have just mentioned that hemp is the plant of future. Opportunity. I attended some of your sessions before, so I know that you want bottom-up TAM analysis. So this is my work. I'll just get you this. Yeah. So basically, our potential customers that we have segregated is between the age group of 20 to 55-year-old. 20-year-old is a guy who is actually started getting that premature aging and early signs of hair fall, and 55 is the guy who actually wants something to fight aging. The concern is hair and aging that I mentioned. The type of buyer is need. So basically we are targeting that buyer. So basically there is a concept of vitamins and painkillers, right? So we want to be the painkiller of men. We don't want to be the vitamins for them. If they are facing hair fall, if they are facing dandruff, and if they need the instant solution, then we should come there. Geography, we are targeting tier 2 and tier 3 cities. Why so? Because a lot of orders that we get right now is from these two cities, these two segments. And also what we figured out ki, they have very good ambitions when they see the tier 1 people. So they want to get there. So they have a lot of ambitions. They want to try a lot of different products. Now breaking the segment size, the targeted age that we discussed, 20 to 55 in India, it is close to around 156 million people. Tier 2 and tier 3 people that constitute to 78 million. We figured out if we constitute the paying customers is just 30%, which is 39 million, and AOV, the data that is back from the Dove India, is the average order value in the men's care company domain is right now 500 rupees per month. So basically that comes to the addressable market to 19.5 billion rupees right now in the Indian market.
What is that in dollars?
This is in the rupees. So we
What
are
is
just
that
talking
in
about
dollars?
I just need to divide it by 90, I guess, if it is the current rate, but it is in the rupees we have mentioned. And if we are lucky enough to capture just the 5% of the market share in the next span of 2 to 3 years, then we are able to make it to 9.75 million rupees or 97.5 crore. Yeah, so this is the opportunity. The opportunity is pretty big in when we are comparing to India. Also, there was one data that we have not mentioned in the PPT. So right now, the men's grooming industry is very huge, and India actually constitutes to only 6% of the market share when it compares to world. And India is a growing market opportunity. So yeah, there's a lot of opportunity when it comes to the outside world. So products that we have right now, we have 4 working products. So basically this company is not a POC scale. We have customers. We have 4 products right now, which is hair serum and shampoo, which so he's my co-founder, Zubin. He just posted one data.
$230 million
Yeah.
market.
Yeah. It's in the dollars. You just ask for the dollars. Yeah. Right now we have 4 products, 2 in the hair care segment. One is hair regrowth serum, one is anti-hair fall shampoo, and 2 in the face care and the anti-aging. So basically face wash and hair serum works on your aging part of the face. We are launching upcoming products, which is an anti-dandruff shots, because what we do is we talk to our customers what they need next. And when we talk to them, the major concern they are facing right now is dandruff. And second, that aging beard touch of wax. So what we are developing right now is an instant solution, because Gen Zs will not use that hair color on their beard or on their hair. They just want the instant solution. So we have made one stick, like I have my beard getting white. So I'll just do that magic stick, apply that onto my beard, and for 24 hours, it's black or it's brown. So it's a pretty instant solution. Then we are launching on soaps and well. Yeah, so these are the products. You can just go to the next slide. So these are the early traction that we got from our customers. We are not a very old company. It's a 7-month-old company where we have sold more than 2,000 units till now. We have received a lot of positive testimonials. If we can just open that link, if you allow, then we can just see that photos that our customers forwarded. Okay. Then we found our initial hero product. So basically a lot of companies, they face a lot of difficulties getting their hero products. We were able to find that hair care combo which works like magic. Till now we have 20% of the repeat rate. So if in the month we are serving 100 customers, 20% are coming repeat. For this month we have crossed 35% of the repeat rates. For the revenue of the first quarter, we did 1 lakh. Last quarter, we did 2.5 lakhs. It's in rupees. This month, we are able to touch 1 lakh till now. So our target for this month is 2 lakhs. And for this quarter, we have a target of 9 lakh rupees. AOV that we have, yeah, sorry.
Very good. Excellent. Excellent execution.
Yeah. AOV, the average order value that we have achieved in the very first quarter was 484 rupees. In the last quarter, we were able to achieve 680 rupees of average order value. And in the current month, we are able to achieve 885 rupees of the average order value. So why I have mentioned this thing, that we have unlocked that trick as well to increase the average order value. And now we are actually planning a lot on decrease the CAC, the customer acquisition cost. So if we'll figure out the balance sheet, we are profitable for this month. Yeah, you can just go to the next slide.
Shubham,
If you have any
question here.
yeah.
What do you know
Sure.
about these 2,000 customers? What is the sweet spot of the 2,000 customers? What is the age group? What is the demographic, psychographic characteristics?
Yeah, so very good question. Actually, what is our superpower as well? We talk to our each and every customers, and we have the valid data. So basically, our customers come from majorly from 25 to 35 years of age. The customer segment is very diversified. We have a customer of age 16 and we have a customer of age 65 as well, fighting and wants his hair back. So the
No, but you
market
can't.
and the customer.
You have to sharpen what you want to go after right now. You know, if you want to go from 2,000 to 2 lakh, 200,000 customers in short order, you have to focus, because your customer acquisition strategy is going to have to align with something that scales. You know, whether you're going to do
Yes.
social media advertising, if you want to do Facebook advertising, for instance, you have to, you have to choose a band and you have to message to that band that resonates. So, okay,
So
you want to,
basically, I
why
got
don't you
this.
follow your, go ahead and follow your slides. So you have competition, obviously.
Yes, so basically by 2022, there was approximately 76 companies operating in this industry. When it comes to top 5 companies, then these are the listed top 5 companies in India, and 4 of them are acquired. One by Imami, one by VLCC, Marico, Global Bees, and one is actually on the bench of getting acquired. So what this data suggests is, in India, this is a trend. If you build a good BPC company in 2 to 3 years, then there's always a bigger player just to acquire you. Like in the recent time, if you have heard about Minimalist, it got acquired by Unilever by 3,000 crores, I guess. Yeah. So basically, these are the competitions. You can just go to the next slide if you don't have. Yeah. So Mod. So how we are different from those 76 companies operating in this domain. So
Shubham,
first of all,
let's move fast. This is not a moat. Your moat is execution. You're executing well. If you continue to execute well, you'll have your moat. This is not the moat. The moat is execution.
Okay, cool. So what we are asking for is, we are looking for the convertible note of 50 lakhs. We will be following the OMTM model. For the first 3 months, we'll be actually focusing on how to convert 1,000 new paying customers with a customer of acquisition cost lower than 50% of the AOV. And then we'll be planned to raise further in 9 to 12 months. We are actually in talking terms with 1 or 2 investors, but what they suggest is we are at very early age of our revenue. So I just want your feedback on the company and the pitch and everything that you have listened. This was it.
Well, consumer products, people want to see, faster growth and so on and so forth. So, and the TAM is a bit of an issue here. You have shown a $230 million, you're positioning it as serviceable available market, and you're assuming a 500 rupees average order value. Based on that, you're getting 230 million. That VCs are going to object to that. VCs are going to look for $1 billion plus TAM. So we have to play with that and figure out how to tell that story. And the big missing thing here is, what is the customer acquisition strategy? You haven't talked about customer acquisition strategy. I'm going to have to go to the other presenters. If we have time at the end of this show, I can talk to you more about your customer acquisition strategy. But if I were an investor looking at this, my first question is, how do you acquire customers, and what is a repeatable customer acquisition channel?
Okay.
All right. Okay, but very good. So far, your execution is excellent. So keep going.
Thank you so much. Yep.
And
It matters.
it's very clear to me that you have learned from your family's business, and that's invaluable training ground. So great, good job.
Thank you so much. Yep.
Shishir, you're up next.
Hey, thanks, Ramana. I hope I'm audible.
Yes, we can hear you.
Fine. Thank, thank you for giving us the opportunity first. Um, I'm Shishir and I am a co-founder SK on the call as well. We are both founders of Korture.com, and we are trying to solve a problem that people, teams, and companies face on a daily basis globally, which is great people quitting good jobs every day. And it's basically never due to the skills, right? If you go to the next slide, it's basically because most of them are misfits. Most of them are misfits in the team, and when I say misfits, it's mostly due to the team dynamics and the personality, right? A very good example of this is Meta, where Mark Zuckerberg has basically hired the best AI researchers in the field, given them $100 million salaries, and at the end of like 6 months or one, everybody is basically squabbling with each other. There's nothing that has come out from the team. And what does it say? I mean, all of them are like
Mercenaries are
top of the
not good people to hire.
Yes, yes.
We don't need
So
software to know
we are
this. We know
basically
this
trying to solve
already.
it. Yes, exactly. So we are building culture to actually tell you who is the right fit for your team, right? We do it at two levels. One is the person to role fit, and then we go deeper where it is a person to team fit. And we do this via two main, how do I say, principles. One is the foundation layer, which is basically based on decades of science in behavioral science, and then we have built an top of that to tell you the exact matches that happen between the person to role fit and person to team fit. So the way it happens is there. I mean, assessments is a part of it, and it's just a quick 12 to 15 minutes assessment for everybody, and then the AI does the matching for the person to role or person to team.
So,
If you go to
if you look at the prior art that exists in, culture assessment, team assessment, and all of that, there's all these things like 16PF and Myers-Briggs and so forth. Are those part of your assessment?
not them exactly. We'll show you the exact frameworks we're using in one of the slides in the next slide.
No, I don't need to see that. I'm just trying to understand the principle of,
Yep.
what is the pedagogy behind your assessment is what my real question.
SK here. So we are using RIASEC model, which is validated for over the last 6 years across 40 countries and
Okay, so you're using a proven model anyway. That was my question.
Exactly.
And we are using multiple proven models and not just one.
Okay.
Multiple, yeah, not just one.
Okay.
So this is the gap we're trying to fill. Like you rightly mentioned, Shrama, there are quite assessments and personality tests. On one end, you have a lot of these skill-based tests, right? You have, like, say, a top coder or a top talent kind of a platform where people how engineers perform and then hire based on the skills. And on the other side, you have a lot of these engagement tools, individual personality tests, which tell you about the individual. But there are very, very few of them which tell you how this individual will actually fit into the team, and even there they will, thrive in your team before they even join your team or company, right? For us, the fundamental unit that we are working on is a team, not even a company, because on a day-to-day basis, everybody works with a team, and that's what we are building for. And that's also one of our go-to market strategies, where we are concentrating on one team in the company, and then we want to spread to other teams in the company.
What is the
I'm coming.
what is the
Please go
methodology
to the
for
next.
that?
Yes, please go to the next slide. So the three pedagogies are mentioned at the bottom. There is RISEC by Professor John Holland at the bottom. Then there's one called Jobs, Demands, and Resources. And then the third one is the psychological safety.
I see.
So psychological safety, in fact, was extensively studied by Google throughout their organization, which predicted that psychological safety among teams is one of the most widely predicted metric for success. Jobs, demands, and resources actually predicts whether you feel either drained or you feel energized while doing your job. And RISEC kind of gives you the work style or personality of that person and how it fits to the environment, right? So, and all these three pedagogies have been validated extensively and proven across multiple countries, multiple cultures. And in fact, what we've also done is we've taken this to IIM Bangalore and got it validated for the Indian context as well.
Okay.
So we use these three pedagogies as the foundation, and then we layer AI on top.
Okay. Now, where is the data coming from that on which you are applying these models? Where is the data coming from? A resume will not give you all this data, right?
Candidate assessments. Candidate assessments is the data.
But it's not just candidate assessment. You need the entire team assessment. You need all the individuals that constitute the team.
Exactly.
Yep.
Exactly. So our foot in the door, if you may call it, is basically the candidate to role fit. So we have a module where you can basically just take a job description and paste it, and the AI will basically dissect it into different parameters. And once the candidate takes the assessment, it matches the candidate to the role. That is the easy foot in the door product that we have. But the actual core product is what you actually mentioned, wherein it's a person to team fit, wherein the entire team kind of takes the assessments and the candidate also takes the assessments, and then the system kind of matches whether based on the entire team's composition, whether this person's work style or work personality will fit into this team, right? So that's the core product that we have built right now.
Okay.
So this is the TAM slide wherein we are looking at all HR tech is about
So
a
I'm
$40
not
billion
interested in
market,
top
right?
down. You heard Shubham comment on this. I'm not interested in top down TAM. Top down TAM, nobody is interested in. Not just me. Nobody is interested in. You need to come up with bottom up TAM. And so, what is the bottom up TAM?
Bottom up TAM is mentioned. We are looking at about $280 million by year 5, and I'll let SK explain.
And that is based on what assumptions? What is the so you have a pricing model here? I see land and expand.
Yes.
Yeah. So what we are essentially doing is the foot in the door, as Shishir explained, is the hiring model where we will charge per assessment, right? So each candidate assess, we charge the company. Then when the candidate joins, we then expand to the team plan where they use it for the entire team and see whether this person is a good fit for the entire team or not, and also identify within the team if there is a burnout happening or there is somebody who's about to leave or there's somebody who's not a good fit, or how to improve the current team dynamics and team culture, right? So that would be then the second package that people will move on to, and then we will kind of expand from there and do the entire company itself. So from assessment to team to the entire company, that will be the model that we'll kind of operate in, and that's how we'll kind of expand our business model.
And what did you assume to come up with this 280 million TAM?
So assumptions are based on our customer acquisition cost as well as the kind of lifestyle.
No. TAM, bottom up TAM has nothing to do with customer acquisition cost. Bottom up TAM, please learn what bottom up TAM is. You can learn it from 1M resources. You can learn it from the AI. You can learn it from the courses, whatever. But please learn bottom up TAM. You cannot raise money without a accurate bottom up TAM model. Okay.
I have that as well. I was just trying to kind of explain it from the perspective that we had kind of built it. So essentially, the assumption is based on the current competitors that we have seen in the space, which are listed in the previous slide.
That is not how you calculate bottom-up TAM. That's what I'm saying. You don't know what bottom-up TAM is and how to calculate it. Please learn it. I don't have time to do this right now. So
Sure.
go ahead.
Sure.
Move to
So this is the kind of So we've also started very recently. It's been about 5 months, and we've gotten about 450 plus individual assessments completed,
Okay.
and with an 80% plus completion rate, which is quite good according to standards if we see. And then we've gotten some enterprise pilots going on with Manipal Group winner brands. And we have interest from the largest job platform in India, which is Naukri, and one of the larger job platforms in the US, which is Next. So both Naukri and Next actually want this for the first product that we have, which is matching a job seeker to a job role. They want something like this because right now they don't have anything other than giving visibility to job seekers if they pay for it, right? So this
And
is a
what,
value add that they want to see added to their system.
so they're going to sell it and they're going to take a percentage of the revenues. It's a revenue share deal.
We are discussing with them whether it could be a white label thing or something else. Obviously, yeah, they will sell it as a
It's a
premium
rev share
service
deal,
and then
basically. It's a distribution deal. Yeah, got it.
yes,
All right.
yes.
Very good. Excellent.
And it is validated. And so the way we wanted to go about is do first 10 high touch pilots, wherein we are actually driving it on an everyday basis with them. Any issues, any problems that they come up, or if they have questions on the whole model, etc., we try and solve it. The second one is actually interesting, and this is where again through this early interest that we're seeing from partners, we want to land the first 50 odd customers, and not just platforms like Naukri and Next. The other channel that we're seeing quite a bit of interest is actually executive coaches. A lot of them want to kind of take this to their clients because a lot of them do not have good tech tools that they can showcase to clients. And a product like this adds value to the kind of services they provide. So we want to go through these distribution channels to the next 60 partners. And then the third one is again, then use leverage technology, large platforms like Workday and 80 platforms we want to integrate so that we are there on the marketplace. Anybody can switch it on in an instant and then work on a more self-serve model. And obviously we will have enterprise plans as well.
Okay.
So this is a team slide. Both of us have about 16 to 17 years of work across consumer and fintech companies in India. Primarily, we've been both on the front-facing side, product marketing, sales. This is what we've done our entire lives. And
who's building this
the product that is there currently. SK is the one who's done it on the tech side of it.
I see. Okay. All right.
And we are looking at about a 500K raise.
Okay. All right. I will explain to you how to work with 1 million by 1 million on fundraisers in a moment. Let me work with the last presenter and then we'll come to how to use 1M by 1M. Good job. Good execution so far. Good vision, good execution. Okay, we have Amitesh Singh and Rakshit Bondwal. Who's Rakshit is pitching? Rakshit, you're on the call. You want to unmute your line and put your video on if you want. What's going on? Rakshit? What's going on? Yeah, I'm not hearing anything from anybody, so I'm going to move and start talking about 1 million by 1 million. If Rakshit comes back, we will come back to his pitches. Um, so, as you know, we are a virtual accelerator, so everything is doable virtually, no matter where you are, whether you're Haridwar or Bangalore, it makes no difference. We will be able to work with you. So 1Mby1M.com is where we start the journey. The digital mind is at Delphi.ai. That's the partner we are using to do the digital mind product. You go to Delphi.ai, Romana Mitra, and you can start using it right away. You can ask as many questions as you want, and you can get going. The premium program of 1 million by 1 million is what you need if you are in the market to raise money. All the investor introductions and all that happens through the premium program. It also has the same kind of strategy consulting, mentoring, coaching, whatever you call it, that we're doing here, but in private roundtables. So the premium program has private roundtables, but exactly same format. And you can come as many times as you want. It's usually weekly roundtables. You can come talk to me on a weekly basis. And we iterate, we manage whatever we need to manage. We deal with whatever needs to be dealt with. It has a curriculum. For example, if you are trying to understand bottom-up TAM analysis, there is a curriculum that can teach you that. So that is the premium program. If you're in the market for raising money and if you're considering 1M from a fundraising basis, that's what you need, premium program. Now, some of you are just trying to learn, and you can also start with 1M basic. You can start with the AI mentor. You can start with the 1M basic. The combination of 1M basic and AI mentor gives you quite a comprehensive set of resources. It doesn't give you the investor introduction bit, but the 1M basic curriculum access and the AI mentor for for personal one-on-one mentoring actually gives you a very good set to work with as well. If you're looking for a lower priced entry point, that's fine too. So go to the website, look at what to expect from premium, basic, AI mentor. We get requests for one-on-one consulting. It's much more expensive. Don't go to one-on-one consulting without trying the AI mentor first, but it is available. It's more expensive. Upcoming free roundtables are October 23rd, 30th, and then November 6th, 13th, 20th. 27th is Thanksgiving, so we have a holiday. But next few weeks, we are here every week, and we can keep going. If you have questions, Rakshit, I'll come to you in a moment. If you have questions about the program after this show today, Irina Patterson on our team is your contact, Irina at 1mby1m.com. She can also get on the phone with you, WhatsApp, whatever, if you need to talk to somebody. Rakshit, can you unmute your line and see if it's working now?
Yeah.
Do you want a video? If you have problems, don't.
Am I visible now?
Yeah, you're audible and visible. So I'm going to go to your slides.
Yeah. Sorry, ma'am. I was in a crisis. My internet just
You were in
stopped
a
working.
crisis. Yeah, I can imagine. Go ahead, Elixir Labs. Go ahead.
So thank you, ma'am, for having me here today. And I was really excited from yesterday to be here. So without wasting any sort of time, I would start. Hello, ma'am. Myself, Rakshit Bondwal, the founder of Elixir Labs. I have another founder with me. He's in another room. He's testing the model and all. So he decided not to come on this stage today. So let me start with a quick question. How many great ideas do you think never gets built? Around 95%. That's the problem we are solving. Turning those unrealized ideas into reality, into working products instantly. Now you can see in the slide, like from past few years, we can see a growth of 400%, year-on-year growth of 400%. This is the growth within the AI market. Sorry, growth in which developers need tools for development. Entrepreneurs need tools to develop something, to build something. For faster building, for cheaper building, and for smarter building. Can you skip to the next slide? Yeah. So the problem we are the founders with amazing ideas often get stuck. Either they can't code or they can't afford to hire a full dev team. Even skilled developers hit bottlenecks from setup to deployment. So innovation slows down and execution becomes the biggest bottleneck. It's what we call the $42 billion execution gap, and that's where we come in. We are operating in a rapidly growing space. No code AI development tool. It's a market of $42 billion. It's a global market of $42 billion, and I'm talking. These numbers have been provided by uh, reports like Emergent Research 2024 and Great View Research. Our
Rakshit,
serviceable, ma'am,
I'm going to stop you
yes,
there.
ma'am.
I'm going to stop you
Yeah,
there.
sure.
Um,
Yeah, sure.
I'm sure you're very, very familiar with what's happening in this market. Even earlier in this conversation with Sandeep,
100%, ma'am. Yeah.
we had a conversation about vibe coding, about Lovable, about Base 44. No one's going to listen to this pitch
Yeah.
if you don't address that head on. What is the competition, and why do you what justifies your entry into this market late in the game like this?
Ma'am, the point is we were also learning so many things. In the meanwhile, we were very
Doesn't matter.
into these things.
Doesn't matter what your justification is for being late. The question is
Yeah, yeah, sure.
is the market too mature, and there is no gap in the market? If there's no gap in the market, you can't enter the market.
Ma'am, to be honest, I'm not gonna cut this point, but there's a gap in this market.
So
If
that's
you
what you
would
need
be
to
talking
start
about,
with. What is that
okay, ma'am,
gap in the
okay.
market?
For sure, for sure. So let me talk about the qubit. Qubit, what we are building at Elixir Labs. It's not just a code generator. It's an entire ecosystem. It's made up of multiple LLM engines. This is a point to be noted. Multiple LLM engines. Any other app don't use that. Lovable, Replit, V0, Bolt New. Any other app doesn't use that. Multiple
But we don't
LLM
need it.
engine.
It's not
hard,
necessary. It is not necessary. I'll
ma'am.
tell you. We have just built an AI product. You don't need multiple AI engines. You need one that works. And you have an early product in the market. You're basically prototyping, or sometimes in our case, I think we have got the full product going.
Ma'am, why, let me explain. Why do we need this? Because what we are doing is making agents specializing in a particular domain. We have agents for a particular domain, such as front end, back end, who would be responsible for all those terms, all those environments. There would be an agent for particularly acquired for back end part, or agent for front end part. Those agents would communicate with each other to make a fully fledged product, right? And that's what is our MVP. If we compare tools like Replit,
so what is the target market for that? That you have to identify a target market that is willing to listen to you. This is burnout
target
and all
market,
that is not what I'm looking for.
Ma'am, target market we are looking for is the founders, solopreneurs, the indie hackers, those who want to build something.
That audience, that target market is using Lovable and Replit and Bold and Base 44 very actively. So how do you convince them that you're a new company, that they should be using you and not these proven products that are doing very well?
Ma'am, what we are doing is those specialized agents. If people can see the results, those specialized agents, what they give you the results from those
I'll tell you what, Rakshit, even better. This is not a fundable situation at all. Okay, you have a funding slide. I'm staring at a funding slide. This is not a fundable situation. Nobody is going to touch this with a 10-foot pole, given what's going on in the market. So you better figure out what is the gap in the market and how do you penetrate that market you know, if your gap is a legitimate gap, you have to figure out how to get to that market, because the market, this is too late. This market is in full swing right now with very big players and with very big money. So they're heavily funded. This is a heavily funded market. There's no way you'll be able to get any funding for this.
Okay.
Okay?
Okay,
That's my
for
feedback.
sure. I would take that as a note.
Yeah. So if you can find a real gap, a genuine gap, and a genuine customer base that has that gap, that has that pain point, that you can address that pain point, that's where you may have a business. At the moment, based on what you have pitched here, there is no business.
Ma'am, for this would be like something I would be sharing with you. Like Elixir Lab was started because we saw a gap. We ourselves were used to vibe coding and all, but we saw that this tool isn't that good. Why? Because it generates generic answers, and generic answers is where like innovations die, and you have to explain so many things to the generic model.
But
And
you're giving me
that's
a
why we
generic
have
pitch. You're giving me a generic pitch. Your first thing you told me in that pitch was that you have you support multiple LLMs. I couldn't give a shit about multiple LLMs. Most founders are not looking for multiple LLM support. So you're pitching things that don't matter. But now it sounds like you're talking about deficiencies in the vibe coding tools out there that you are trying to fulfill. That may be a pitch, but that's not what you pitched me just now.
I guess maybe I had somewhere lagged behind in my articulating. I didn't articulate that thing
That's right.
quite good. But can you understand what we are trying to do? Like, did you get an idea what we are trying to do? So
Not
if not,
really,
I
but I
would.
will. Not really, but I think you're going in the direction of, you have used some of the vibe coding tools and you have identified some gaps in those tools, and you're trying to build a vibe coding tool that addresses those gaps. That's what I understood.
Ma'am, that's exactly what we are doing. So the thing is, each platform have like generic models, generic answers, and those answers are not quite good. You need to explain so many things to those models. Like sometimes it also needs 2 to 3 hours of prompting to get an idea to the model that we are building this product. But when it comes to this qubit, you don't even need to have like you just write a prompt. I need a front end part for my website, and it needs to be attractive. The nav bar should look some sort of glass morphism. I need glass morphism effect in my nav bar. Just write these things, and the model would generate the results would be fabulous.
That's because you're trying to
Even
do a library. You want to do a pre-built library.
we want to build. Sorry, my bad. I didn't understand that point.
Are you trying to get people to use a pre-built library?
No, we are not trying to use the pre-built libraries. We are using those LLMs, right? We are just letting that LLM, or we are training that LLM in a certain area that it would make the result best out of all. You don't even need to explain.
The problem you're going to face is that, you know, these companies have millions and millions of users, right? The ones that are in the market, they have millions of users. They have a lot of money. They have a lot of revenue, and they have a lot of venture capital. So don't think that they're not
100%.
working on these points. I wouldn't assume that they're not trying to improve their product as well. So I think you're gonna, the minute I'm basically role playing with you on what the investor is going to say, if you go try to raise money, first and foremost, raising money on concepts doesn't work. You have to build something and sell something. All these people that you heard from today Shubham and Shishir, they
Shishir.
have built something. They are already
Yeah.
selling something. So that's when
And
investors
we
start to be interested. But the point
and
that
we already have. Yep.
yeah, go ahead. You already
Ma'am,
have
we
users?
already have we already have the product ready, and we are serving users, those early access users. There are around 150 users, and we have been taking feedback from those users, like what's the experience with the model, and is there something you guys want? I want this thing to be changed, or I feel like this point is something where it would be lagged behind. So we are getting those feedbacks each and every day.
Okay, that's good. That's good because you're not at a point where you can raise money.
Mm-hmm.
First and foremost, you need to really deeply understand what is the product that you're building, which you're working on, but you're not there yet because you didn't pitch it right. And secondly, you need to understand the profile, the ideal customer profile of the customer that you're going after. Because right now, if you say your ideal customer profile is the founder, well, that's exactly the same ideal customer profile that Lovable has, and especially non-technical founders, technical founders as well. Founders are using Lovable and Replit and Bolt and Base 44 extensively. So that's squarely in their target customer base. How are you going to compete with that? What is much more? You need something much more specific. Is it the customer who has tried to use Lovable and failed? That would tell me that, okay, this may be a customer who has problems, has experienced problems, and may find your solution attractive. But then how do you find them? So things like that, you have to think through what exactly is your product and who exactly is your customer, and what is the size of the bottom up TAM of that particular ideal customer profile segment. That's what you need. Okay, so there's very specific. What I just told you, you have a recording of this session available. What I've given you is very, very specific. So execute on all those specific points.
Okay, for sure, ma'am.
Yeah. Okay, anybody else? Other questions? I will take a few moments. There are a lot of other people in the room as well who haven't talked to me yet. I'm happy to answer questions from the public chat, or if somebody in the room would like to talk, let us know. Maureen can make you a panelist and you can talk through your computer as well. And Shubham, Shishir, if you have other questions, I'll take that now. Rakshit, if you have other questions, I'll take that now. Bias, you have a question? Please feel free to introduce yourselves as well and what you're working on in the public chat. Bias, if you have a question, if you want to type it in, I'll take it from the public chat. If you want to talk, let us know. Maureen can put you on as a panelist.
Yeah, hi, this is Shubham. Am I audible?
Yes, please go ahead.
Yeah, so in my pitch, we discussed that in the end of the meeting, we can discuss about the CAC strategy right now that we are having. So can we discuss it right now?
Yes,
The customer acquisition.
Customer acquisition strategy. So I mean, it seems like, Facebook or some kind of social media marketing, whether it's Facebook or TikTok or whatever, is an obvious customer acquisition strategy. And in tier 2 cities in India, traffic is still fairly cheap. So, and you can target fairly well. Have you tested that yet?
Yes, so basically we are majorly of our sales are getting from the meta marketing itself. So we make founder-led content. So me and my co-founder, we make exactly more than 200 videos per month. We test every videos and then we figure out the videos that give us the ROAS of more than 3. So this is the way that we actually make contents. We are actually, apart from Beards and Shears, we are a content marketing company as well. We write content.
Are
we
you
shoot.
doing paid meta ads, or what? How are you going about it? Is it paid meta ads that
Yeah,
you're
so
going?
basically we are doing paid meta ads. We are running campaigns on WhatsApp, and we are doing paid meta ads.
Okay. And that is converting.
Yeah, and that is converting. And then the repeat rates, actually we are getting repeats from the customers, like as I mentioned that
Yeah.
we have a superpower that we are connected one to one to our each and every customers. Our each customers have my or Zubin personal number or the company's number, and we have
Yeah,
their
but that's
number.
not scalable. That is not scalable at all.
Yeah, that is
Don't
not
don't
scalable.
don't go
No, no,
about
yeah.
telling investors that
Mhm.
that's what you're doing, because they're going to immediately conclude that you're not scaling. You're not going to scale. If that's what
Yeah.
if that's what it takes to resell or get the repeat buyers, that's not a scalable process. So you have to,
No,
if
no,
you
that
want
is
to
not
raise
actually about
invest,
the repeat buyer. Yeah, yeah. Please go ahead. Yeah.
if you want to raise money, you're going to have to um, build something scalable. And all this like one-on-one high-touch stuff for small denomination is not not possible to scale.
Yeah, we are actually, that is a kind of a gesture which is making our good base, because when we connect to our customers, then they are so happy that they tell 10 more of their friends that I talked to this company's founder, and they are so good that this is happening. So actually what is happening, if we convert one customer, that one customer is bringing at least two customers with them. So this is the
Okay.
math that I just explained. Yeah.
All right.
Yeah, because of that personal touch. Yeah.
Shishir and Rakshit, I'll come to you in a moment. Bias is posting a bunch of stuff in the um, I can't read that much material in chat. Bias, if you want to talk, just unmute your line and I will take you next. You have to quickly explain, give me an elevator pitch and I can give you feedback based on that.
Yeah, hi, am I audible?
Yes. Where are you dialing from, Bias?
Yeah, basically, currently I'm speaking from Kerala, but I'm from Iran originally and
Oh,
based in India for the past 12 years.
I see.
So currently I'm working on I'm basically from an export and import background. That's my father business. I mean, my
Okay.
family background. And that's why we moved to India. So basically, my father is doing business with India for the past 30 years, and
Okay.
I'm settled in India for the past 10 years. So I have done my BBA from Bangalore and then my MCOM and MBA also from India itself. But from past 2 years, I have shifted from, management background to the tech industry and software. And it all started because of, I actually my own business back in 2019, and I just exported a shipment of bananas from Maharashtra to Oman. So on that shipment, I lost around 46 lakh rupees within a night. So that was something, which made me to think, and why do I lost this money, so much of money? And then actually, the thing is that we cannot monitor our assets when it's in the sea, because there is no internet connectivity. So we don't have any information, what is the temperature inside the container and many other stuff. So I started, working on during those days, ChatGPT was just new in the market. So I started using ChatGPT, and then after that, I got, really surprised and amazed with the concept of ChatGPT, and it was how it started. And I started to ask and see how the actually ChatGPT is working. So later on, I started on a project called PortGPT. PortGPT was actually a project which was IoT based device, and also we were able to monitor our assets during the transit time. But then the project wasn't sustainable because the satellite and all, it's very expensive. So the maintenance cost of the platform was almost, 1 crore 40 lakh rupees per year. So last year, you might know Nasair Yasin. So Nasair Yasin came to India, and there was a creator event. So I participated in that creator event, and then somehow I met Nasair Yasin. And then after meeting him, and we had some discussions, and then he was telling me about a health platform. So he told me like there is lots of opportunities out there in health market. So that is how I started, diving in the health industry.
Do you know anything about
So
the health industry?
yeah, I do. I'm going to gym for the past maybe 8 years, and then my family is also. My mom is also. She was a nutritionist. But I lost my mom. So anyway, but then I have a good knowledge of it, and I'm also learning each and every day. I'm also learning about how the genetic is working and how the metabolism is working, and then
So what are
actually
you trying
a
to
lot.
build? What are you trying to
So
build?
what we are building, it's not a platform, it's a whole ecosystem. Okay, so are you aware of Abha numbers? Something which is, recently government of India introduced it. Like it is something, you may know something is called EMR and EHR, which stands for the electronic medical reports and electronic health reports. Okay, so just let me tell you, one basic thing. Like if you are a, patient, or if you have a, background of, any kind of illness, allergy or whatever. So like we don't have any, a specific tool or a specific, platform that we can actually store your whole data. Okay. Though there are some platforms are there like, Open EMRs, EPIC and all, which are there mostly in European and US, but not in India. So imagine if a person from India is traveling to Europe, if a person from India is traveling to US, and if they are, facing any kind of medical condition, then there is no evidence, there is no proof of what happened to them like earlier, or maybe from what kind of demographic background they are. Either they have, any kind of allergy, or maybe any kind of, family issues. And also each and everything is kind of, there is no evidence of it.
So what are
So
you trying to
basically,
do? You're trying to build a EMR?
what we are doing is it's a whole ecosystem, ma'am. It's not only just an EMR. We are covering from, like we have a big platform from fitness to wellness, EMR, HR, co-pilots for the doctors and all. And
You can't build a company with that big footprint. You don't have the resources to build a
we are
product
already
of that
starting.
scale.
We are already starting. I'm in Kerala. I have funded by the government of Kerala from past 3 months. Right now, team of 7 guys are working for me, and we are already releasing the first phase of the project by the 20th of November. We were about to, release it in the 1st of October, but due to some delays, it's going to be released in the first phase in the 20th of November. In the first phase of the project, we are just
Are
basically,
you interested in my feedback, or are you just interested in talking?
No, I am definitely, but I just want to, tell you that what we are doing currently and where we are currently.
What I'm telling you is that you cannot build a product with that large a scope
Okay.
as a startup.
Okay.
So you're gonna need
So
to
what is your
you're gonna
suggestion?
need to build something that you can start selling and building momentum around.
Exactly. That is what we are doing, ma'am. So we have, divided the project in 6 different phases. So we are going to release the first phase of the project in this November, 20th of November. In the first phase of the project, we are just actually, releasing the basic trackers for the users, and also basic gym bookings, spa, salon,
Okay,
and beauty
what's your
salon. And all of
question?
the
What's your question?
So basically, what I'm looking for is, I'm looking actually for a proper GTM strategy and also a monetization plan. Because as the platform is quite big. So I was looking, for an expert person to help me with the monetization plan.
So did you hear what I said about how to use 1 million by 1 million, about the premium program, the basic program,
Yeah.
the AI
Yeah,
mentor, and so forth? So choose how you want to work with 1M by 1M and get started.
Okay, sure, definitely.
You're welcome.
Thank you so much.
Sure. Rakshit, your hand is up. What do you want? What do you want to talk about?
Ma'am, I want your suggestion with the marketing strategy, and is there something you want that we should change into the pitch deck that for the next investment need or something like that? I have two questions. First of all, marketing strategy. Like how shall we market this product to the audience?
Yeah, but I just told you that until you identify what that audience is, I cannot derive a marketing strategy. Once you identify what that audience is, then I can derive that strategy.
Ma'am, but audience is everyone with an idea who wants to build something, who don't even have a knowledge of tech.
That is not, you didn't hear me. That means everything I told you in our conversation earlier, you ignored everything that I told you. And you're asking me the same exact question again. Exactly the same question.
I get your point.
What did I say?
Ma'am,
I said this customer is not available to you because this customer is being targeted by other people at scale with huge resources. You will not be able to get through to this customer.
Ma'am, what do you think? How shall we acquire those customers? What are the strategies for that?
I don't know the customer. I don't know what is the product. So how can I tell you how to acquire those customers? You haven't yet told me what is the problem that you're solving.
Got your point.
So I gave you a bunch of feedback. Please listen to that and try to address the questions that I gave you. And if you can come up with the ideal
Okay, ma'am.
customer profile, then we can derive a go-to-market strategy based on that.
Sure. I
Until
just
you
took notes from your.
until you pinpoint what is the ideal customer profile, we cannot derive a go-to-market strategy.
Yeah.
Shishir, you have a question?
Yeah. I just wanted to ask you about the potential of this team chemistry platform that we're building for the US market. Like you mentioned, there are quite a few other tools, but not something that is kind of solving the problem, the gap that we've looked at. Would you say that
Have you
US is a
done?
good market to target?
Have you done the comparative research for the US market?
Not so deeply yet. We've only looked
Well,
at the
that's your
Indian
first
market for
step.
now.
That's your
But
action item. Go do the
okay.
comparative analysis for the US market and see what you're up against. A product like this, since it's a horizontal HR tool, should potentially be applicable to any market, but then you have to deal with all the local market competition and figure out how to compete.
So then would you say that we first focus on the Indian market, get to some scale, and then go to the US?
I don't know. I don't know. You haven't answered my question. What is the competitive landscape of the US market? I have no idea. So unless we know whether you can get into the US market given its competitive situation, like, what am I pushing back on with Rakshit? The market is too crowded. You can't get in a very crowded market. So if you have if your competitive landscape is a very crowded market, it's very difficult to get in, and you don't know how. We have to understand what kind of funding is chasing all that, because customer acquisition costs money, right? So if there's a lot of venture capital funded startups going after the same customers, then there's a lot of money being thrown at all that, and we have to assess whether it is viable to enter the US market. The one thing you should be aware of is if you are trying to build a venture funded company, you will need to get to the US market. Otherwise, you're not going to be able to raise funding. The playbook in the Indian software industry is that build in India but sell globally. That is the only kind of business that the VCs fund in India, B2B business. B2C, they will fund India-facing B2C. India-facing B2C is fine, but if you're talking about a B2B business and you want to fund it with venture capitalists, it has to be a US-facing company. Global, basically, but usually US is the starting point.
Thank you for the answer.
Yeah. Rakshit, your hand is up again. I need to wrap up, so go ahead, Rakshit. What is your...
Sorry, ma'am. Sorry. It was.
Okay. All right. Well, I hope, I give feedback very candidly and very directly. So you have to absorb that feedback and address those points, because I also give you very precise points on what to work on. Bias, I do not have time anymore to do this right now. It's already 15 minutes past the stop time normally. My recommendation to you, Bias, is to go use the AI mentor and start dialoguing with the AI mentor. You will go a long way if you start doing that. Okay, thank you for coming today, and I'll see you next week. Bye, everybody.
Bye now.